do talk about reflections on the growth of the venture ecosystem, and I've been a participant in this. I've played maybe a role in a lot of it, but it's been a whole lot of people, because movements are not about any one person. It's about a coalition of the willing getting together to do something that's important because they have a shared belief in the fact that it's important and it can really change the world. So we'll talk about this. A little bit of this will be sort of a history lesson. I'll go through the headlines, although John unwittingly stole my best headlines, so thank you, John. No problem there. We're going to talk about why this matters, where we've been, and it does kind of feel like it's been a bit of deliverance from the wilderness. And my perspective on this is over the last 12 years, from the time that I moved back in the States. We're going to talk about where we're going, and then importantly, because a lot of you here really aren't showing up for a history lesson, but more of what can we glean from some of these things. And I'll tell you, a lot of that's colored by my own opinion, and not necessarily facts, if you will, and more technology. Okay. Ignore. So anyway, that's what we're going to do. And I'm going to start out by saying, too, and relative to Tim and whatnot, a lot of the stuff that we're talking about today wouldn't have happened were it not for that opportunity for creative collisions in an open, honest, and trusting environment that was aimed at startup CEOs and other senior level people. And that all began with the CEO Forum. That was my introduction to the area. I would probably be a lot of other places other than here had I not gotten involved when I was running my last startup with Tim and the CEO Forum. And to tell you how consequential that really was, I wouldn't have met Jeanette. We wouldn't have made the connection there and all the things that have maybe transpired since with the ARC. I wouldn't have probably met Mike Malone in that setting, and some of the things that I've been able to do with the council likely wouldn't have happened. And a lot of other connections, things that have come out of that. Moxiox might have been out on their own without the current leadership. There's a bunch of examples I could give at how valuable that monthly opportunity is with other leaders to share ideas in an open, honest, and trusting environment. And you won't hear Tim talk a lot about that, but I'll tell you for sure, that has been a consequential part of the story that I'm about to go through. So thank you, Tim.
Thank you.
So, you know, a lot of times I'll start off with this kind of presentation, particularly with people from out of the area, showing a guy with a gun that's about as big as a bazooka in front of a pickup truck, saying, we constantly fight the perception that there's not much going on in Arkansas that would be consequential in terms of building a venture or startup ecosystem. And that, quite frankly, is an advantage, because it allows us to, one, internalize that sort of chip on our shoulder that we can do it the same way Sam Walton did, and Tyson did, and Sheridan Garrison did, and Murphy and Stevens and all those other people. All those other people. We can internalize the fact that we are burdened sometimes with low expectations by other folks. But the fact is, NWA, Arkansas in general, and NWA was singled out in this particular report in Entrepreneurship Magazine, was identified as one of the 9 unexpected areas in the country where there was really a lot of tech startup activity. And that could be further evidence. If you want evidence, it's as John said, we had 3 significant venture deals funded by out-of-state venture firms that were all announced within literally a couple of weeks of each other. There had not been 3 venture deals of that size in the previous 5 years. There had not been a venture deal the size of the Acumen investment, maybe ever, in the state. So it's an exciting time to be here. In addition, other evidence. We've got 2 teams that have come through Carol Reeves' graduate entrepreneurship program at the university just this past year, Home DX and Pico Solar, that not only just literally wiped the floor with all the Ivy League schools on a national and international basis in business plan competitions, they were also successful in raising seed finance. That's important. It wasn't just an academic exercise for any of them. That's important. And significantly, and the numbers are big, thanks largely to some of the finance raised by Acumen, $193 million across 100 companies that have been part of the Innovate Arkansas program. So this public-private partnership, led by the entrepreneurs, but also supported by business leaders and state, is something that is unique here. It's unique and it's important, and it doesn't work this way everywhere in the country. You have to kind of take my word for it on that. So this is a really busy slide. If you're into slide mechanics and choreography, this is precisely the wrong way to do a slide. But I put this up here just to kind of give you an idea of the building blocks that have transpired over time. So that gold block that you see there in the corner was in a way what started this latest renaissance of growth in Arkansas. There was a Millikan study done in 2001 that basically said we can't continue to build this economy based on a business attraction strategy that looks to bring in low wage rate manufacturing. I mean, I'm summarizing in kind of a significant way, but that was the gist of it. We have to organically build the high wage rate jobs here, high skill manufacturing, technology, knowledge based. Why? Because we don't want the university system in the state to be a farm club for Texas or California forever. We've got to have a way of retaining those jobs. That started a lot of the movement that we see now. That, along with things like Accelerate Arkansas, and the Innovate Arkansas program, the Arkansas Research Alliance, pioneering efforts in business incubation on technology-based ventures by Calvin Goforth and the VIC Technology Venture Development Model. Back when he started, when AJ got involved with Nanomech, they had to feel like they were in a wilderness. There was nobody else in the state doing anything similar. All this stuff has progressed, and I would say, and I used this analogy earlier, it hasn't been like a boulder rolling down a hill where some autocratic people and institutions say, we have the answer, follow us. It's been more like a small snowball that started on top of a fresh field of powder that has progressively rolled down the hill, picking up the best ideas and attracting the best people along the way. It's been a shared journey, not a boulder rolling down the hill with an autocratic mandate. It's been fun to watch. And it's important because any number of reports will tell you the vast majority of new jobs are created by startups. That creative destruction that goes on when new startups spin up, when they hire people, that's where the new job generation really comes from. And the fact is, as we've already heard, capital and talent are going to migrate to those areas that are great places to live, like Arkansas, like Northwest Arkansas, and that have strong focus on innovation. What's the formula? Education, innovation, entrepreneurship, capital, that equals economic development. You'll hear our governor talk about this all the time. It's not a novel concept, but sometimes the least common sense of all is common sense. It's really true. This is a formula that works. So what are the things that we constantly kind of wrestle with, the things we think about as we think about what comes next? We've got to develop and attract and retain the best and brightest talent. The talent is the asset that makes a difference. The physical infrastructure, all that's supporting, knocking down the regulatory barriers, that's important. But the talent is what makes the difference. The talent will drive the movement. And you have to project to that talent the idea that we're not going to make it impossible for you to succeed. And then the talent themselves, all of those of you out there building new ventures, you'll have the will to do it and the belief that it's not impossible. Some of you are young enough to not know yet that what you're trying to do really is impossible. But you're going to do it anyway. You're going to do it anyway, and that's what we need. And we definitely need capital for all the funding stages. So a moniker or acronym that I stole from Missouri State, because I think it captures really a good name for what we're talking about, is this point of calling it the idea movement. The idea movement. Innovators, designers, entrepreneurs, and artists. The magic happens when we all don't think exactly the same way, when we're not all from exactly the same area, when we have this diversity of backgrounds. The opportunity for creative collisions, of bringing that group together, that's where the magic happens. And we'll talk about the context for how some of that works. In addition, for this ecosystem to really work, and this is something that could be generalized just about anywhere, if you look at Silicon Valley or Austin, Boston, any of these areas, it starts a lot of times with this engine for creativity. A lot of times that's a good university system. It can also be large companies that are enlightened. But you've got to have that talent breeding ground, that creativity breeding ground. In addition, you need to have a startup culture that really supports and builds on the idea that creating something new from a clean sheet of paper is really important. And we can build on the lessons of the past, for sure. And the examples we've had from Walt and Tyson, Sheridan Garrison, and many, many others. And then you have to have the finance available. That's where you want to go. This is kind of where we are. And I put this up here as a dose of reality. We're at the beginning of the beginning in all this. We're off to a good start, and it's been a long period of time in this renaissance. We have a lot more to do. And the only way much of what we're talking about is going to get done is with the continued contribution, involvement, and engagement from all of you. And that's existing businesses, that's new startups, that's service providers, that's government. It has to be a shared objective. So as a startup founder, and I've been through the process myself 7 times, I can tell you I've been in places where there was no startup ecosystem, both in-state and all over the country. And your biggest fear in going through that is, am I alone? Am I alone? As a startup founder, choking on your toothpaste, as Tim says, every morning thinking about how you're going to make payroll in some instances, if you don't have anybody else to talk to, that's a lonely place. That's a lonely place. And that's part of our challenge, is to figure out how to make sure there's the support and the other folks to talk to that have been through it. So these are some of the things that we've looked at doing and we've actually done. It's been about angel network creation. It's been about Entrepreneurship Alliance and all the things that have been done there at the Iceberg. Accelerators and incubators, contests and competitions. All these things are really excuses for getting people together in this type of setting to talk about what you're doing. And that's, again, where the magic happens. We've got more to do. There's a certain level of fragility in what we're doing. A lot of what we pasted together has kind of been duct tape, bobby pins, and it's fragile. We need a little bit more structure now to continue to have good communication, coordination, and collaboration. How many times have you looked to set up an event and you find out there's 4 other things scheduled on that same day that kind of address the same audience? A common calendar, simple things like that. We need to do more of that. In addition, while we've done a great job on the early stage finance, I think, as far as angel funds and angel networks and whatnot, eventually we're going to get to the point where we can't rely on the big money to come from out of state. Now, the big money definitely will be attracted to where the talent and the good concepts are coming from, no doubt about it. But we want to be masters of our own destiny. We don't want to have an expectation that somebody from out of state is going to lead every big venture round. So that's an opportunity and something we're going to work on the next couple of years. What's the context that we try to use? And the best ideas I ever talk about are ones that I've shamelessly stolen from others. In this context here, programs, places, events, and networking was something that I heard Christian Anderson, founder of Gravity Ventures originally, founder of the original big idea guy behind the ARC concept. This is the context he uses: programs, placemaking, events, and networking. I'll show you why this makes sense. This is where we were, say 12 years ago, not a lot going on. This is where we are now. And it's largely due to the efforts of all of you, of just showing up at a Gone in 60 Seconds elevator pitch contest, taking a chance and showing up at a Natural State Angel Association, putting a little bit of money in the Gravity Ventures investment group, going to a Creatives United, going to Tech Drinks, working at the Iceberg, participating in the ARC as a mentor or applying to be part of it. Being part of an online group called Developers of NWA so you can share common development stories. Going to Bar Camp, going to Made by Few. All these things are what makes a venture and startup ecosystem work. And while it looks like we've got a lot done, and there's a lot of pieces there's a lot more to do. That was 2012. You could add a few more things on there at this point, actually. And I'm going to reiterate this can't be something where somebody has a 5-year plan on top of a mountain and the lightning bolt comes down and all of a sudden the magic happens. It's also not going to happen in places where they expect, even though they've got all these assets and resources, that somehow somebody's going to save the day by bringing in 10,000 jobs in a new manufacturing plant. What happens is where the entrepreneurs and the funders, the investors, and the business people take hold of the movement from the grassroots side. They've got to own it. What we can do on the institution side is just make it less painful. Create the environment for good things to happen. It's got to be light and stealthy. A lot of you who are entrepreneurs out there, particularly young entrepreneurs, the last thing you want is the man telling you need to do something. I don't know, for me, whenever somebody started talking like that and the herd was going to the right, I was turning to the left and running away as fast as I could. I see some heads nodding over there. So it's got to be a movement that's led by the grassroots. And there's still some things we need to do. I talk about a venture center here, and this is really this idea of a little better coordination. This isn't a physical building necessarily. This venture center organization that we're now talking about is something that will pull together the programs, the placemaking, the events, and networking. Will be a dedicated team that can make sure that this community continues to get built. This is a SEAL team, right? This is not the infantry. It's not 10,000 people. This is 4 or 5 dedicated people who have as their mission pushing these things forward so that we're communicating better, we're collaborating better, and everybody knows what is going on. This is something we're going to work on over the course of the next year and try to get funded. So what about developing talent? I said that's the biggest asset. It is. Let's look at some of the successes. And you talk about scrapping and doing things with no budget. The entrepreneurial movement within the college structure here at the U of A started with one tireless, dedicated, butt-kicking woman named Dr. Carol Reeves, who had no budget. No budget. It was just her. She decided she would make something out of entrepreneurship here in the state. And I can tell you, over the course of the last 5 years, there has been no graduate entrepreneurship program that has kicked butt and taken names more than what Dr. Carol Reeves has done. And it's not just an academic exercise. Yeah, it's great to have the Happy Gilmore checks and the trophies, but these become real ventures. These become investable deals. And that's important. That's something we can be proud of. And how did she do it? She did it with not a lot of support, quite honestly. There was a lot of applause when good things would happen, but it was basically her tirelessly working to make that go. And I just love this one. And in fact, I noticed after I did this, when I added the MIT and Harvard at the bottom, that Harvard was already on there, and I just wanted to add it one more time to kind of rub it in the face of the Ivy League folks that you don't have to go to MIT and Harvard to come up with a great business concept. And in fact, when Pico Solar went up in the backyard of MIT and won $250,000 in a clean tech business plan competition, where their main competition were the best and brightest from around the world, from MIT and Harvard, to say that made some of us feel a little proud would be an understatement. It was amazing. And that's another investable company, Pico Solar, spin out of Silicon Solar, that you'll hear more about. Well, the legend of Carol, okay, the coach. I'll just jump to the bottom line there, and this is not a trivial point. She was identified as one of the top 10 women in the country in entrepreneurship, and rightly so. And rightly so. Here's some thought leaders, and I put this up just to kind of build context for some of what I'm going to talk about next, and I'm going to move this along just a little bit. But as you think about it from the standpoint of running an existing business or creating something new, we can look at the original foundations of management thought, Peter Drucker with sort of sage, timeless management thought, and Deming with the total quality movement, and Tom Peters with the whole series that started with In Search of Excellence, and Porter and the Five Forces, and Napoleon Hill and sort of the philosophical point of view. They set the foundation for good management, good leadership. Building on that, you have guys that created Y Combinator, like Paul Graham and Dave McClure from 500 Startups, and Brad Feld, who talks about startup communities, and Osterwilder, who talks about business model generation. They're kind of the next level of accelerators, iterative customer development, this whole idea that you've got to get out of the building to find out what your customers really want. And then more recently, there's been this application of lean, the concept that came out of manufacturing, the idea that anything that doesn't add value to a customer or to a shareholder or to an employee is probably waste, and why are you doing it? Well, we can apply that to the startup movement. It's common sense. There's not a lot of new thinking here, but there is an efficiency of thought and process that's really important. It doesn't replace traditional business planning. It makes it better. It doesn't replace traditional project management. It makes it better. It doesn't replace traditional views of how to develop a strategic plan. It aligns with being agile when you hear from the market about the things they do or don't like about your strategy. So these are thought leaders that I think we should pay attention to, and these are just some books that I'd recommend whether you're in a startup or an existing business you take a look at, because there's a lot of good lessons in these. And again, to reiterate, any activity that does not add shareholder, stakeholder, employee value is waste. So think about that as you scrutinize your daily activities. Am I doing something that I don't need to be doing? Is this going to add any value to what our mission really is? Here's some other thoughts. Entrepreneurs are everywhere, not just in startups. Internalize the fact that it's a mindset, right? It's a mindset. Success sometimes is a worse liability of an existing company, because you tend to want to rest on your laurels a little bit. You finally got to a point where you're comfortable. You need to have that startup mindset all the time, and that fact that you're going to stay hungry. I think good entrepreneurship, or entrepreneurship, which is a term overused, has got to equal management. It's got to equal good management. It means you're questioning everything you're doing all the time. To quote John James here, fail fast and iterate. Validate that learning. So really what we're talking about in this particular methodology is an application of the scientific method, something we all learned in 5th, 6th, and 7th grade. What's the hypothesis or assumption? How do we test that quickly? How do we get out and validate before we spend an ungodly amount of money and waste a lot of time? How do we validate early on what we're intending to do? And this whole idea of spiral versus waterfall. So traditional planning says plan, document, and you carry the planning document over to the desk, and you've got the plan. And then you hope that when you execute, it aligns with the plan. The spiral idea, or agile, for those of you that are a little newer in the software world, it's just the idea that you run a lot of experiments. You come up with your assumptions, you test them, you build a minimum viable product, and this is not just software where this will work, and you validate it in the marketplace. It's a lot more efficient way to think about some of these things. And then innovation of accounting, think about that as defining milestones. Those of you who are in the ARC Challenge will hear us harp on this a lot when you get into the financial side of it. Don't just identify your use of proceeds. I know you're going to spend money on marketing. I know you're going to spend money on the typical functions of a business, operations or engineering. Think about planning based on the meaningful milestones that you're going to achieve with the money that you intend to raise. And the same is true for an existing business. The one point I'd make on this one is, and this is true for an existing business, is ultimately your product is not your product or your service. It's the business model that is the engine for value creation. It really is. That's the way that Lean asks us to think about these things. And I think these points that I'm talking about are what are driving, on a global basis, the democratization of new business creation. It's not about writing the big business plan and necessarily having to raise lots of millions of dollars right off the bat to get something launched. It's about doing it efficiently. You could also say that in lean planning, the idea is to identify the risk and then knock those down based on a priority as quickly as you can. That's the bottom line of this. And this is what it looks like, and we won't belabor this a whole lot aside from saying rather than starting with a 50-page business plan, you start with one sheet of paper that articulates a problem and the customer segments and your solutions and how you're going to measure success with key metrics and your unique value proposition and your unfair competitive advantage and your channels to market and your cost structure and your revenue stream. It's one page. It's not 1,000 pages. It's one to start with. And you iterate that quickly and you learn from that in a more effective way. And if you think about it, those 9 boxes give you a real simple way when you think about I've got to communicate in 60 seconds or less to somebody that's important what I'm doing. You can begin to visualize where you are in each one of these boxes. So okay, enough with that process kind of stuff. Let's talk about placemaking a little bit. Where would we be without the research park? Several 100,000 square feet of research park that grew out of, in true Arkansas fashion, a former pantyhose manufacturing plant. And it's now a world-class research park. We took something that was a tired asset, and out of necessity, because we didn't have enough engineering space 20 years ago, we said this is going to be a research park. And it's really causing a renaissance on that end of the town. Now you've got 30-something businesses that are out there. A lot of them are based on university intellectual property, others are not. It's a vibrant part of the ecosystem. So placemaking is important. These are the kinds of things that go on at the research park, and without Phil Stafford, I'm not real sure where we'd be in that regard. These are some of the things that you could expect if you become a tenant out there. It's an excellent part of the ecosystem. Placemaking is important. And over time, and if you look closely at that picture, you'd see that the vision there is that it's going to grow all the way from College, 71 Business, to across Razorback Road. I mean, they've got plans for eventually that being a big tract of land with significant economic impact. But that doesn't always work for the scrappy startups that don't have a university focus. So this idea of the iceberg, the startup co-working space, has been pretty essential as well. It's essentially a community center. It's another opportunity for innovators and designers and entrepreneurs and artists and the maker movement to all get together on a regular basis for cohabitation and for learning. We created this thing called Gone in 60 Seconds, and that was totally a lark. I mean, this was a fun way of taking what we viewed as kind of the best attributes of American Idol and Shark Tank and driving them together. And again, the contest, and we've run more than 10 of these all across the state. The contest was really just an excuse to get people together so that the startups could get out there and practice pitching their ideas. They could maybe win a little bit of money, and more importantly, we could engage the broader audience of service providers and investors and other folks in the conversation. And it's worked pretty well. I'm happy to say that this is going to go throughout the South Central U.S., and it's already in Canada under another name called Pitch 101. And again, not an original idea, even though I blogged about it in 2011, totally stole the format from what they'd done in the awards banquet at the Governor's Cup. That was the best part of the Governor's Cup from my perspective in terms of the entertainment value. You got 1,000 people in this audience only once a year, and the 6 undergraduate finalists and 6 graduate finalists have to get up there and do an elevator pitch. It was really entertaining. And so at the time, this is 2 years ago, we said, why aren't we doing this all the time? And that's where it came from. So there's going to be a schedule of these posted soon, and again, they're going to be all over the state. It's grown out of Northwest Arkansas.